All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today's Tuesday, May 16th, and debt ceiling negotiations resume in Washington. Yellen is confident to avoiding a default. And then we also have important retail earnings from Home Depot, Target, and Walmart this week. Plus, today, we had the April retail sales report. So, how will the markets react? And most importantly, how are we trading it? And we did have some trading action today that we want to talk about. Anyhow, if this is your first time here. I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus. And we're real traders who trade live accounts. So, therefore, we got a lot of trading experience and we're showing you how we trade these crazy markets. So, trust me, we know our stuff. We're not afraid to tell you like it is. So, if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And I mean, Mark, it's really interesting markets. The ranges are getting smaller and smaller.
They really are, Marcus. And I see you have the S&P up. And for the last seven trading sessions, now going on eight, it looks like we're snookered right around that 41.25 level. Really having a hard time closing significantly higher or lower. And just a tight range. So even though yesterday we were slightly higher, up 12 points, now we're pulling right back and getting stuck in that range even longer.
Yeah, but if you look after at the last few days, that's exactly what we are seeing. So here we were slightly lower by 0.15%. Here we're slightly lower by 0.16%. Yesterday we were slightly higher by 0.3%. Right now we're slightly lower by 0.3%. I mean, this is point something. I mean, we haven't seen a move above 1% in quite a while here in the S&P. I mean, last time was in the beginning of May where it was 1.85%. But yeah, that's a little bit away. It's almost what 10 days since we had a significant move here.
Yes, yes, and we thought there'd be a little clarity with the Fed and their decision and the inflation numbers that we had a couple weeks ago and earnings, but instead it looks like traders are just kind of sitting tight, trying to figure out what's the next big shoe to drop or whatever is next to move the markets.
Yeah, and it seems that right now the discussion is shifting towards the debt ceiling. We talked about it a couple of weeks ago. As we're getting closer to a possible deadline, to a possible default, this is where it will move into traders' focus, especially since there's not much else going on. And this is where we hear almost daily from Treasury Secretary Yellen, and she has a few things to say there.
Yeah, quotes, waiting until the last minute to suspend or increase the debt limit can cause serious harm to business and consumer confidence, raise short term borrowing costs for taxpayers, and negatively impact the credit rating of the United States, unquote. That's what Yellen had to say. And, at this point, again, it's one of those things that has been a topic of conversation and potential concern over the years, but really hasn't been something that really has been a significant worry since 2011. So we'll have to see if the politicians there can get their act together and come to an agreement, because it would be catastrophic if they don't.
Yeah, and it seems that right now traders are waiting and seeing and want to see what's happening here, because again, there's not much else going on. We are at the tail end of earnings season right now. We have retailers reporting earnings, and I mean, one of the retailers reporting today was Home Depot, and wow, this is a trade that we actually took. We'll talk about this in a moment, but that was an interesting move at Home Depot.
Yeah, a gap lower. So Home Depot, they actually reported earnings that were a little bit better than expected, but the revenue was worse than expected. And then, of course, guidance is the next element, right? And they cut their full year guidance, which investors did not like. So we opened lower, selling off a dip through 280 and even lower. But since has rebounded a little bit.
It has a rebound, and I mean, it was interesting to see what they said. They say consumers are purchasing fewer high ticket items, And also, they're starting fewer projects. So, this is where they said that's why we believe that this year our revenue might decrease a little bit or not grow as aggressively. And we'll talk about the trade that we took here in just a moment. But I also want to take a look at the economic calendar because we also had core retail sales being released. And after last month, it was sharply decreasing, and here expected an increase of 0.5, 0.8%. It came in a little bit worse than expected, but kind of in line with expectations.
Yeah, we have core retail sales up 0.4%, which was lower than the 0.5 expectation or forecast. Retail sales up 0.4%, which was half of what was expected at 0.8%. So better than last month, but lower than expected. And we saw that going into the open, there was a little bit of a drop after this report, looking at futures and also combined with Home Depot. I think kind of a combined worry or concern there as we start to get more retail numbers earnings wise.
Yeah, but then I mean, as soon as the markets opened, I mean, right now it's very, very mixed. The Dow is down 0.7%, the worst performer of the indices right now. The S&P down 0.3%, the Nasdaq surprisingly up 0.1%. And I
Yeah.
mean, this is fueled by a move in AMD, and we'll talk about it. Let's actually go over to our positions. And since we talked about AMD, let's bring this up. That is a position that you're in. I'm not in this one. I used to be in NVIDIA. And then AMD today having a massive, massive day, up 4.8%.
Yeah, I mean, what a move. This is the type of move that I've been waiting for. Early on this morning, we were seeing a push higher and some nice follow through to yesterday's gains, up 2.25% yesterday. So when we started to break above 98, we were pushing towards 99. It looked like we might approach the 100 level. I decided to sell calls, so I was able to collect some premium selling the 103 calls. Getting 50 cents, bringing down my break even another 50 cents. In the moment, I was really pleased with that trade, and I still am. Although there's definitely more premium now because we broke through that 100 level and AMD up almost 5% now, approaching the highs that we saw last in March.
Yeah, I mean, wow. This will be interesting. And we just see that, yeah, I mean, AMD up also, NVIDIA up 1.3%, Google up 2.4%, Amazon up. So it seems that here we see the NASDAQ definitely higher, everything else deep in the red, especially this morning, the energy sector.
Yes, yes. And you know, Marcus, I think that this heat map shows where the money is, at least for today. And this goes back to the AI play, right? There was that research that came to the conclusion that the S&P would be down 2% if it wasn't for this push towards AI stocks benefiting from artificial intelligence, and a lot of that gain this year being AI based. I saw some numbers. There was research done by the National Bureau of Economic Research. They released the report showing AI's impact on public companies' value. They took the 100 largest publicly traded companies and ranked them on how much each will benefit from AI. The top five: IBM, Intuit, Qualcomm, Fiserv, and Nvidia. Also S&P Global. AMD was on the list, ranked number 11. So AMD getting a little AI benefit as well. Loving this 5% move today, though.
For sure, for sure. All right, let's take a look at our existing positions and then let's talk about some new positions that we were looking at. And also, I mean, the Home Depot trade that we did here. Okay, so CTRA, Coterra Energy, super interesting. Yesterday had a great day, up 0.3, up 3%. This morning, down 1.5%. Still waiting for a break here towards the 26 so that I can sell calls against my existing position. Ex-dividend date is coming up next week, and if I still have them, I will get more dividends, and I've already been able to collect dividends earlier here. So that helps bring down the break-even, which is now at 22.54, so way down here. Not too concerned about this. PNC, PNC again, a little bit all over the place. Yesterday up 1.9%. Today down 0.74% for now. So nothing to do with that one just yet. And let's talk about some new trades. GM. So that's a trade that I entered yesterday afternoon. Sold these 32 puts because I have been trading GM quite a few times. And as you can see, we do have some support at 32. We talked about it this morning with our mastermind members. Definitely a little bit more of an aggressive trade right now with GM has been falling today. The 31 put would be available, 31.50, but I mean, I'm okay with my 32 here.
Yeah, I mean, this is one that has some nice ranges with support around 30, 31, 32-ish, going back to trading uh, that we saw before the pandemic. So some long-term support there and a nice looking chart.
Yeah. So this was one of the trades, and then we just got to talk about the Home Depot trade because that is definitely the quickest wheel trade on record for us. Because here's what happened. I mean, we like these earnings plays when we see that there's a reaction and we believe that this reaction is overly negative, and we saw this in the first few minutes. And that's where I decided to sell the 270 put expiring on Friday for $1.20. At that time, you were focused on AMD because AMD was skyrocketing and you wanted to sell calls. And honestly, by the time you looked up and you were done selling calls on AMD, this already bounced back. The most amazing thing is because as soon as I'm filled, I put in my exit order to close at 80% of max profits within the first 24 hours. And after this, 90%. And literally a few minutes later, it closed. So, I mean, this
Yeah.
was a 20-minute trade. And we have had this happen that we entered a trade in the morning, closed it around lunchtime with 80% profits, maybe in the afternoon. But within 20 minutes, that never happened before.
Yeah, and I mean to put it into perspective, a buck 26 I think is what you collected. When I was looking at it, it was around 85-90 cents. So I was wondering if we were going to get another push to session lows. That was not the case, and I think less than 15 minutes, Marcus, in and out. So a buck 26 collected out for 25, 26, 28 cents, whatever it was.
Yep, 25
A
cents.
real quick trade. And normally, when you're going out, even short term to this Friday's expiration, you just don't see that much volatility crush.
Yeah. So that worked out well. And then we were looking at some energy plays today. So a couple of energy plays that popped up is Oxy, Warren Buffett's favorite energy stock right now, because I saw that he was ditching Exxon and loading up on Oxy.
Yeah, and so this is interesting because you have the Buffett effect, right? So when Buffett and Berkshire Hathaway get big on some positions, traders will try to mimic what he's doing since the Oracle of Omaha has had a pretty good track record.
Yep.
And I saw the same. So he added to Oxy, he added to Apple, he added to HPQ, Para, and MKL. And as far as energy goes, you're right. CVX actually was what he trimmed, uh, and so took his stake down in CVX a little bit. Also GM, which you see there. He
Yep.
also trimmed Amazon.
That's interesting. That's
Yeah.
interesting.
But a new one actually that got a big benefit from the ad was COF, so Capital One Financial.
Yeah. Yeah, today initially up big time. Right now pulling back, but still up, what, 3% against the overall market here. So,
Yeah,
yeah, super interesting. But definitely today, even though the markets are rather quiet, there were some opportunities. And yeah, we looked at them. You took a position in SU, right?
yeah,
So, I
yep,
mean, that's another good looking chart, good looking stock here. And it's really interesting because the fundamentals are actually looking better than for Oxy. But again, I
Yep.
mean, we're just doing a brief check here. So what we are looking for is basically the quarterly and especially the annual results. So here we see 4 out of the 5 years they were positive. And if we bring up, let me just duplicate this and bring up Oxy, we see that here, just at a quick glance, the fundamentals look a little bit worse. So, but again, Warren Buffett, he reads through all of the reports. We don't. We just
Yeah.
keep it easy, keep it simple here. But this is where he sees more, but definitely a much, much higher loss in 2020 than Suncor. And also just looking at the chart, Suncor honestly looks a little bit better to me than Oxy.
And that's the thing. I think that there is a little, extra weight in Oxy because of Buffett's investment. But I like the chart of Suncor. In 2020, with crude oil prices going negative, I mean, this is where, for me, we could toss out 2020, even though there was negative net income both for Suncor and Oxy, just because with the pandemic, it really skewed things, right? I mean,
Right.
that was an outlier for oil in particular and energy stocks. But 2019, negative net income for Oxy, where Suncor was profitable.
Yeah. So yeah, I mean, this I think is a great trade. For me, it is too correlated with my CTRA position. So if we look here at SU, Suncor Energy, we see that the correlation to CTRA is 0.67. My cutoff is 0.65 according to my plan. So here we're definitely a little bit too high for me. That's why I skipped on this trade. But therefore, I took the GM trade, and the correlation here is 0.57. So right now, everything is looking pretty good here in this portfolio. Before
Yeah.
we take another look at the markets, let us know if this is helpful as we are walking through the trades. If it is, give us a quick like, and if this is your first time here, consider subscribing because this way you get a notification whenever we go live. All right, let's see what is happening here in the markets. Nothing. I mean, S&P still down, Nasdaq still slightly up, Dow down. But if you look at the range of the S&P today, I mean, we're trading in a what? In a 20-point range. 20-point range. That's nothing on a 4,000 point index. That's a half a percentage point. So not a whole lot going on. So definitely traders are watching what's happening here with the debt ceiling negotiations. And I believe they are meeting again today, don't they?
Yes. Yes. So plans to meet today with Biden and congressional leaders, and yeah, the S&P opened the current price. We're even in a 5 point range, so just not going anywhere.
Yeah. All right. Hey, again, if you find this helpful, give us a like. And we also have a few more videos for you. Take a look at these videos and consider subscribing. This way you see it whenever we go live. And then we'll see you again tomorrow.
Happy trading, everybody.